Hi guys, welcome to the mentor session. So, not last week, the prior week, we talked about dropping gold. It's on the 28th of July. Now, I know that the drop we saw yesterday in gold was something different and a much, much larger move. This move, as I talked about last week, was a bit of a liquidation type move, or last week, the week prior, the liquidation type move. And we looked at the technical run up to it, how to map for that move, why you would get that type of movement, where your access points to that move were. What I want to do today then is go and look at the side of this trade from the point of view of how do you actually take the trade on? So it's all well and good understanding from a technical point of view. But what you now need to understand is it from the actual ladder, the order flow side of things, and what needs to be going through your head in terms of where you're entering the trade, what your risk is, and where you're getting out of the trade. So let's go and cover the first few of these things. Whenever you're actually trying to take any trade on, and this is away from the technical side, in terms of when you actually put the trade on, you've got to be thinking about a few things. Your access point, where exactly are you going to get into the trade? Now, your chart is going to tell you where this is. And from a chart, you're going to be able to look at the chart and say, okay, I think I should be in from here. That's all well and good. That's enough to tell you where, but then you need to be asking yourself, what needs to change compared to recent? So what's got to happen? What you need to be doing here, and this all comes down to, have you been reviewing what's been going on recently? And if you've seen the way the market's been trading certain points, you then know what needs to change. You'll know what the order flow was like when it was trading that level prior. Now you need to see it change. And also, you need to think about how you need to enter the trade. Can this be taken as a passive trade? Does this have to be taken aggressive, hit market on the break? Are there other options as well once you're in the trade? So that's your access point. And I'll talk you through this on this trade specifically in a moment. Then it's the in-trade management. When do you accept risk on a trade? So what I mean by this is, with many trades, you'll have a point where you're able to look at the trade and you have to say to yourself, okay, well, I need to take the risk on now. And I'm going to accept that I may have a risk of X number of ticks, but by understanding where your target is, you're able to frame that risk, accept that level of risk based on your target. The next part of that, and I'll show you this with a little box, when to feel convicted. At what point can you, when you're in that trade, say, yes, I'm right now. And once you're right on the trade, your thought process needs to change from where do I get in, what's the risk that I'm accepting, more to where am I looking to get out of this? What are my targets and what do I need to see to stay in? And to stay in, it's about thinking about rotations and mentally updating yourself on what's going on. So what I mean by that is when you're in a trade and you see it going down like this, what you're not doing is watching the ladder, back to a chart, ladder, chart, ladder, chart. What you need to be thinking about is they're the prices you need to know. Those peaks and troughs. So you'll see where it drops to and you see where it bounces back to. In your head, you need to basically remember those 2 points. As long as you do that, you're then giving yourself the chance to effectively say, well, I don't like it if we go above here, and I'm happy to then try and add as we break here. And then you move on. So you're seeing the rotation in terms of potential, but also you're seeing the rotation in terms of knowing when it's changing. Starts doing that, the move potentially is over. And then this part leads to your exiting the trade. Do you have a target, or is the target a zone of prices? If you've got a target, it's quite a simple thing to say, right, that's my target. I'm going to put my order there and I'm going to get out. And as a trade, that's how you judge your trade. If that was your target and that's where you got out, good trade. You can try and improve that and look at, was there any clue to suggest you could go further? But on the whole, the trade itself is good. If you've given it a target and taken it to there, that's what you're aiming for. Is your target a zone though? Because if you've got an area where the market may well stop, this is now saying to you, you're going to need a little bit of order flow when we get down there to tell you where to get out of this trade. The gold one was a great example of this. And then we'll see on this gold one an order flow based exit, where having got through the point where you would want to get out, i.e. or having got into your target zone, you're then given a very clear sign from the order flow that this is the point you want to be out, or this is the last chance or the last place you would want to try and stay in. And that can then lead to a reversal, which I'll show you very briefly. So this was the move down. The premise of the trade, of course, was that we'd got a flat bottom over the previous day, all coming in at around about 19.25 in gold. Bear in mind, this is the old contract. This is the Q contract. August. Overnight, we traded down there again. And since then, we've then bounced, and I mentioned this last week, the idea of a trigger point. So in terms of access, here's your access point. And also in terms of the taking risk on, this is the way you want to look at it. You've got this execution zone here between 25.8 and 27.6. So around about a 20 tick zone where you effectively want to be looking at that and saying, that's where I wanted to put my risk on. If we go out of here, I'm wrong. But once you break out of this zone, you're right. And that's the point where then your focus shifts to, where do I get out of the trade? Not, should I get out here, should I get out there based on order flow? So you're less focused on the order flow in terms of trying to find reason to get out. Target wise, we got a decent target down here, and you've got a target zone of 1905 to 1897, previous weekly highs. So that's your target. Let's first go and have a look at how this starts off though. This is the main bit that we want to be looking for. Right, so here we go. Just coming into the beginning of this move, and we're sitting just around about 29. So at this point, we're just here above the level. You're thinking, I don't need to do anything just yet. I want to see it below 27.6, and that's where I'm interested in taking this trade on. So at this point, you've got an area where you want access, but we're not seeing anything to tell us to get in. Yes, having a little dip down, but that's not enough to really say get into the trade. We're just stalling above the level at the moment. So this is your waiting phase. We're now waiting for it to get down towards 27.6, then we're interested in getting in. So still sitting around 29, not much going on at the moment. And what we're looking for is a change when we get down towards these lows, a change from the way it traded there last time. Start to see a little bit more pickup in velocity, a bit of pickup in energy here. Nice and quick, flicks down towards 27.6. So there we go, there's your first entry potentially. You know we've now got this whole zone here to be wanted to try and get in. We just saw a quick flick up towards sort of 27, down towards the bottom of the zone. We're not really getting it sticking to the low just yet. Trades 27 again, so this is giving you a chance to get flicked back. Remember, at this point, we're still in this zone here. So anywhere between 27.6 and 25.8 is where you want in. Goes through, quick flick back, very fast back. That's going to make you a bit nervous. We do start to stall once again around 27. So there's another chance to sell. So what we've managed to do is get most of our position at around 27 here. We've seen a little flick through the low and quick back. Your risk is still above 27.6. We're now back below 25.8. And now the move is on. So this time it's not a rush back. So right now, whether you've got any more in or not, you're now focused on the rotations in this. Where are we bouncing back to? So at the moment, 25 is about as far as we're bouncing back, and 23.6 is the low. 23.6 breaks. So we now got 22.3. Where are we bouncing back to? 23.6, 23.7. You can then look to try and sell that. So 23.6 ends up going over here. Do we break 22.3? No. So we're starting to get a little bit of bounce here, and it's starting to hold this small range, 23.6 to 22.3. So you're not going to find this from a chart. You look on a chart and that's what you're getting. It's not giving you anything too clear here. So we now know that for this move to continue, we need to break here. For this move to start putting people in doubt, we break 23.7. So this is your waiting phase now. There's no need to try and jump in with anything more. We're selling, if you're selling down here, you're selling 20 ticks, 25 ticks below the main level. Your main target, remember, is still down at 05 to 87. Now we break 22.3, 21.9 trades. Where are you bouncing to? Can we get above 22.3? Yep. So it's not broken enough to really want to get you to sell again just there. But you see the bounces are quite muted there. So we're bouncing to around about 22.8. Now we push on again. So all the time on this move down now, it's just a case of how far are we bouncing off the lows. And we're finding now you're bouncing very little off the lows. Maybe about 5 ticks or so. You just traded 0.3 to 0.9, 96. We do get a little 10 tick bounce there, up towards 0.9. Remember that previous low that we held around was 21.3. That was the notable low. So around 21.3, if you can get flicked back, you're happy to then try and take another short on that. Now you're down 19.6, quick flash through, only 3 ticks. We're now starting to stick a little bit below 19.6 as well. Back up, you see the selling keeps on coming in from there. And this is the way you want to look at it. As the move's going, you're still aware that your target's quite some distance lower at the minute. You've got around about 150 ticks to go to the target. And so what you're looking at in terms of being able to add on, and each add is going to have its own stop. So if you've just added 19.6, 90.5, that's going to have its own stop. Not massive, maybe 20, not 20, 20.5 perhaps. Just making, you're looking at where it's actually going to bounce back to. So it's come back towards you. Nothing too bad on that. And we're starting to see the breaks of lows are getting larger as well. So we're now down towards 17.7 for a new low. Each time we get to the low, it's a little bit steady as it breaks. And this helps you out as well. You know that each time it gets to the low, it becomes a little bit steadier and then pushes through. But you're still getting these quite big flicks back. So 17.7 is now the level to watch. So effectively, if you're trying to hold this, it's effectively the point to sort of move your stop down, if you will. I wouldn't have a hard stop, but I'd be thinking, right, well, if you get back up here, I'm going to start getting a bit nervous on the trade. Again, we get to lows and it starts to stall. So here you start to see a little bit of stalling at 14.7, 14.8. Starting to put more volume in here. This is important now to watch where we're bouncing to. 16.2. Yeah, you're looking at approximates. This is becoming quite a quick move. You're not sort of trying to, and this is why I wouldn't have a hard stop. I'm not trying to pin it bang on to a price here. Having seen this volume get done down here, this is now becoming important, 15.2 to 14.7. Once you're through there, that volume should be showing that we're not going to come back and the move then continues. Another flip back, 13.3 is now the point. And these are going to come important when you're looking at the move back up as well. Because these effectively become targets. You can either write them down or just remember them. If you're in this trade, you'll remember the numbers easier. Seeing it after the fact, you're perhaps not going to be quite so quick at remembering the numbers. Quick snap down towards 10.1. The move's starting to get faster and faster now. So whenever you start seeing a move getting faster and faster, you're starting to think perhaps we're moving towards the end. It's been quicker down there. You're getting a bigger rotation back. Not enough to just get you out. Remember, the target's still down at 0.5, so we've still got another 50 ticks from here. So you're back to the question of where are we bouncing to? Hits 12. It starts and it gets a little bit stuck at 12. And then some few little larger orders come in. So now 12 becomes your peak of bounce. But you see now, this is bouncing sort of 25 ticks at a time now. So the rotations are getting larger. Again, another indication that potentially we're towards the end of move. Right at this point, we're just in here. So you'd be thinking, if you've carried this from the mid-20s, your worst outcome is you're going to be getting out somewhere above 13.3. And your ideal outcome is we still got the rest of the target to achieve. So it's just a sort of stall before the main move. There's no real reason for it to stop around there. So now we're getting down towards breaking lows again, 09.1. Still getting this sort of 10 plus tick washback. So it's breaking, but the washbacks are getting faster and faster. And there's two ways from an order flow point of view that you want to be out of a trade. Either an exhaustion or an absorption. So that's what you need to be thinking. By this point, this isn't now the time to want to be trying to add on. Remember, at this point, we've now done nearly 200 ticks. We've just dropped 80, 100. There's your first clue to get out. There's your exhaustion phase. That very fast snap down is a very clear sign of exhaustion. So that was the first time we saw any kind of huge drop in one go. Now you start seeing this large order up here. This becomes your effective end of move point. So out of the trade now, that shouldn't have been out of the trade. You could have a stop above this, but seeing it trade into this, you're now looking at where do we fall away. Drops down to about 0.3, and then it will trade straight through it. This should be your exit. Any trade into this, you want out. It won't pull away from it now. So when it won't pull away, you're out of this. So you're out. Could you go long? We're not falling away. So your risk on this is about 0.3. And if it breaks here, you're then going back towards these levels as your targets. So you see someone sold 900 here and it won't fall, 1100. Straight through. There goes the jump back towards 8, which was where the big stop move down came from. Then you're looking up towards 09.1, 10 and 12 were the next areas to be targeting. So you have the potential to turn your exit into a reversal trade. That was a great example of it, and you don't often get them that clean. But the main bit here was that was your sign for the exit. It was the way that large order tried to hold the market down on the back of what was a 250 tick drop. That fast attempt to hold it down, what ends up happening is the shorts that are in here start to see that as a chance to get out. They buy into it, buy into it, buy into it to take their profit. Once that large order's done, boom, you get the fast jump back up. I hope that's then helped in terms of how to manage the trade once you're in on a liquidation type move. How also to recognize the ends, the exhaustion, or someone attempting to hold the market, and then giving you the potential of a reversal trade as well. Once that large order got exhausted, then the move up came. I'll wrap it up for you there, guys. I hope that's been very helpful. Next week, we might well have a look at the gold move from today, which has taken back all of this, pretty much. In fact, managed to get down towards about 1850 over the last day or so. So gigantic move in gold yesterday, much more trend-like than liquidation. I'll wrap it up there for you there, guys.